Yeah, ready we know. We're ready now. We're ready now. Everybody can hear me loud and clear. How is everybody doing this evening? Good, 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 good. All right. That's more for here, man. Everybody doing good. How far is treated them? How's the week going so far? Yeah, man. GG, I hear appearing. I mean, no, it's a GG, I hear appearing on that. Yeah. I say, man, too early to say. Cool, no? I say, you only a trade AU this week. All right. You can unmute the mic in as long as in the background not too loud, you know. Is it, man? What you say I go on now? Shanna there? You know, Shanna say she look forward to this from when we don't know if she there. All right, cool. Cool, cool. I see you, Shan. All right, Zane. I say all right. All right, so just want to thank you guys for coming in today. For making the time so we can go through some stuff. Because as you can see, from the group, for the last like 3 weeks or so, probably the last month, really and truly, I haven't been really looking at currency pairs a lot because something else has been, taking up all of my time. So it's something that, I was introduced to for a while now, but, make some money off of it, but it just never did make any sense. So, I got introduced to volatility index 75. I know what you're supposed to hear about VIX 75, right? And, to me, it was really good, because, the risk, you can make a lot off of it and you can lose a lot off of it because the leverage on that type of account is 1 to 1,000. So the way VIX 75 moved, it was just wild, It never made any sense to me. Like, I could just jump in if I see it moving in a certain way. I jump in and make a food off it and cut. But I would never feel as confident in my analysis on volatility index 75 as I would on a currency pair because we do floors and ceilings and supply and demand using stuff like that on currency pairs. So I was trying to apply the same methods on the volatility index, but apparently the volatility index don't really care about none of that stuff. So it would be hit or miss majority of the time. So I was trying to figure out how to predict volatility index 75, and I've arrived that you can't really predict it because at the end of the day, you do what you want to do. So somebody else told me about volatility index 100 and high frequency volatility index 100. So they're the same thing, but one is faster than the other. No, first of all, we know about volatility index, right? Volatility index 75 and whatever, but we don't actually know what the hell volatility index is, which is true. I don't know what it is. I know some of the market data comes off of, the NAS 100 really and truly. But I'm doing some reading from the broker, and apparently synthetic indices are, simulated market data, right? Now, it's simulated market data that it acts like real monetary market, but the behavior itself is created from the use of randomly generated numbers. Now, these random numbers are generated through a computer program. And for transparency issues, the broker they say they are unable to have an effect and or predict which numbers will be generated. So therefore, they can't really manipulate the market, right? Now, the synthetic indices, they're not affected by fundamentals, right? So like we are trade currencies and Trump come on TV and say, yo, XYZ and the US dollar would fly up or fly down. Or you have like interest rate decisions for like AUD or NZD, so it's probably gonna shut up or shut down. With volatility index now, it's not affected by any kind of fundamentals because it's primarily of randomly generated numbers created by a computer. So I say all of this to say that we are technical traders, right? And we use technical tools to analyze the market from charts. Now, how many times have you marked up your perfectly good chart on GJ or EU, and you have a sell limit and you have a 20 pip stop loss, and price go for your stop loss, hit your stop loss, and then go in your original direction. We talk about this every single week in the group. You see what I'm saying? So I always ask, what's the solution for this? You know what I'm saying? There is really no solution for that because it's just the nature of the market. Anything can happen at any given time, and you have different players in the market, which leads me back to volatility index, right? Now, over the last 3 weeks, when I've been trading volatility index, it's like I don't know, it's like a price action trader's dream and a technical analysis or analyzer's dream, right? Support and resistance is respected. You know what I'm saying? Market flow is respected. I mean, if you analyze the chart and you look on the pattern and you see a head and shoulder, so the right shoulder might form, and so you do your proper risk management. It's like it has like a 70% chance of playing out when compared to a forex pair. It's probably like a 30% chance it's gonna play out, right? And if you're gonna get a spike, you'll get one spike for show you the true resistance or support level, and then after that, price are gonna move in a clean fashion. You get what I'm saying? And that's what I love about the volatility index 100. You know what I'm saying? It's not too wild like volatility index 75, and it gives you good return. Good return. For a technical trader, if you apply your technical analysis properly, then you can trade that and you can just trade them two pair and you can make as much money as you want, right? Because the whole point of me introducing you to these pairs is because it's easy for you to make money. Easy for you to make money on them. Because the other beautiful thing about the volatility index that I love, right, is that when you're learning how to trade, they teach you to trade with the trend, right? So them say, trade with the trend XYZ. But if you really look at forex pairs, how often you see forex pairs a trend? Like it doesn't trend for too long. And if it does trend in what I'm saying, it'll go over in a no time. Or by the time if you get in with the trend, half of the trend gone already. So that's another thing that I love with the volatility index. It gives you the true direction of the market. It just goes, man. And when it goes, come back. It just go on to the reach the next major level or so. You know what I'm saying? So with this pair, yeah, it's really about trend trading when it comes on to these pairs. And you can't take no reversal trades because it's more guaranteed, say, a trade will continue in the trend than it's going to reverse. So you see, all of the mistakes that what we've been making on forex pairs by taking retracement trades, we can't do it over yourself. We really have to stick to the plan and trading in the direction of the overall market. Then, no. Let's see. Really and truly, it's only one broker right now that offers synthetic indices, which is volatility index. And it was originally binary.com that I was using, but they've since changed their name and they've upgraded their systems and they've moved on to a new platform. And I'll go and send you the link so you can sign up for the account. And then when you sign up for the account, you can either open a demo account now or you can open a real account, and then we're going to jump on the charts and I'm going to show you some of some of the price action movements, and I've developed a strategy as well. So I'm going to be sharing some of that strategy with you. So if you guys have anything to say, y'all can say it, See what I'm saying? I pasted the link in the chat. You don't have to do that right now. You can do it later. We're not focused on that right now. All right. So let me just show you what's going on now. All right. So this is what the broker page is going to look like. We're not saying the link that you use, you can just I think you can just create free demo account, or if you scroll down, it should give you the option to open a demo account, but I don't a real account, but I don't see it. So there are a few different accounts that you can open on Deriv, but what I want you to open is this one, Deriv MT5 account. So this is what we're going to use. So we're going to use the MetaTrader 5 to trade, because I mean they have two other platforms, but those are like, I mean it's more like binary options. It looks like binary options. I mean, but since we are all accustomed to MetaTrader 5, I think that's the best way to go about it. All right, and then once you sign up for the broker, you're gonna get access to the smart charts, because that's the smart chart, the trading view charts, because they're not on actual trading view. You can't like go on trading view to see them. So you have to open the charts from these type of charts from the website itself. So this is high frequency volatility index 100, and this is the regular volatility index 100. All right, so these are the two volatility indexes that we'll be looking at full time, or that I have been looking at full time. I don't trade volatility index 75 again, and I don't trade anything else. It's just volatility index 100 and the high frequency volatility index 100. All right, so let's just look at some of the charts, right? So this is the 4-hour on. Everybody seen the chart? I'm sharing the screen now. I don't know if you're seeing it.
Yeah, bro. Yeah, man.
All right, cool. All right. So this is the 4-hour on the regular volatility index 100, right? And we are going to identify the levels automatically. It's one level right there. And then we'll probably mark out up here. Another target. So let's say we're starting from here, right? So we only care about price in this range, right? So let's see how we will take trades off of this. Just look at the movement of price and tell me if you see how you would enter these trades.
Yeah, them clean, brother.
Like it's not even, I mean, for us who are good technical analysis, I mean analyzers, it should be easy for us to take trades on these pairs. And I'll tell you, from you identify an area of price sensitivity and you match up your risk management and you set your limit, it's supposed to be nice. You know what I mean?
So, like a 0.1 pound this hour.
I was gonna get to that, but okay. All right, so the point one. All right, so this pair right now is a regular volatility index, right? So it's very weird. Let me see if I can explain. Right, so this is the long and short tool, and I've been back testing, and what I've come up with is that for the regular volatility index 100, which is R100, the minimum lot size that you can place on this trade is 0.20 lots, right? So that's the minimum that you can take on this current this pair. And for 100 pips, it's $20. Right? So this would be 100 pips. And then for this particular pair, I've from my back tested, my stop loss would usually be between 70 to 100 pips, and my targets would be 400 to 500 pips. So it would be like a 1-4, 1-6 risk to 1-5 risk to reward ratio. So this would be 50 pips. I mean 500 pips. Sorry, this would be 500 pips. And I know you can continue. I mean, you can extend your targets to probably 700 points. But like on this now, the reason why I said the reason why I've identified to use like 400 to 500 points is because the way how this market moves in it really moves in impulse and waves, right? So impulse and retracement. So you definitely are gonna get you move up, you move down, you move up, you move down. So most time I realize that the impulse phase can push out up to 500 to 600 pips, right? So I just keep it at like a median 500 or 600. So like if you catch like a good entry or so, I mean, this would be like one trade. Yeah, that would be one trade. And then you can probably get another entry somewhere after this trade has been completed. So you don't want to get too greedy when you come on. So that's why I say like a median 500 points or 550 should get you into a good trade, right? And a 100 pip stop loss on volatility index 100. If you enter at a good area, according to the strategy, then with a 100 pip stop loss, you should be able to survive most things, right? So you should be able to plan your risk management around 100 pips. So in this particular trade example, this would be if price came down to your stop loss and you were using a 0.20, the minimum lot size, you would have lost $20, right? You would have lost $20 here. But if you were to win this trade, you would have gotten $100 off just that 0.2 lot size, right? If you were to win this trade. So that's something to consider, right? Now, the most important thing when it comes down to volatility index is to make sure that you are trading with the trend, right? Now, what I've been doing to make sure I'm trading with the trend is I've used the 65 EMA, right? I mean, I've backtested the 65 EMA for a little bit, right? Once price is above the 65 EMA, you should look for buys, right? And once it starts to move below the 65 EMA, you can look for sells. So the 65 EMA lets me know the direction of the trend on the 1 hour, right? I use it on the 1 hour and the 30 minute. Let me see. 65 moving. Let's see. Yeah, so if price is above the 65 moving average, then you look for buys, right? On the 30 minute and the 1 hour. And then if price is below the 65 EMA, then you look for sells, right? Now you're going to have some instances where you have price overshoot the EMA by a few points. And at that point, you will look for a floor or a ceiling and you trade in the original direction of the trend, right? So here we see that price is above the 65 EMA, right? But here you see it kind of overshoot the EMA, but you have a price floor down here. See? So this is where you would take the trade off of the price floor after you see the double bottom formation here. And I'm going to show you how to get more accurate entries soon, right? Same thing here. Price come back down to this price point, it respected the 65 EMA and formed a price source. So this would have been a good entry point. So if you see the rejection here, rejection here, rejection here, you see this wick, you know you can safely place a trade here, right? Safely place a trade here, and you can do 100 pip stop loss. And when we say you can safely, it means I mean, there's like a 70% chance that, you know, it not going to do no funny business, right? So that's the best part about it. It's like a 70% chance, you know, them not going to do no funny business. And like, so if you go to your bed and you set the buy limit and go to your bed, you know, you're not going to have a heart attack in the morning when you chat them a load and you want the price to go shoot down, right? So that is why I like this. I mean, it's simple, it's smooth, the price action makes sense, right? Sometimes though, you know, like on the weekends, because some of the data it gets it's from the NAS 100, and you know, so the regular indices close on the weekends. So on the weekend, then you will get like some choppy movement sometimes, like this, right? So this was over the weekend. So you get some movements like this, really. And then when you see markets like this, you really don't want to be in this at all. So you know you can get a break at that point in time. But let's just look at the price action again, right? Now, when it comes down to like trading with the trend, you know, the reason why I say it's not safe to take any reversal trades is because these pairs like to continue. You see what I'm saying? So like over years, you know, when it broke this floor and it retested on like the lower time frame, once it left, you know, it left, you know, it now come back, give a short pull back, it continue, give a short pull back, it continue, pull back, impulse, retracement, impulse. You see what I'm saying? So impulse retracement, impulse retracement, impulse retracement. Smooth price action, just like what we learned how to trade. I don't know, funny business, right? Let's see. I'm gonna have to check it chat, you know, because nobody not talk. Y'all have any questions, anything?
There, man.
All right, let's see. How is it been gone? Can't see.
So you tried on a higher time frame or does the 101 day 30 meter the practice spot?
But mostly practice on the 1 hour time frame.
Oh.
Because I know you interested in our swings, you know. Which is fine. Because once you identify a major level, you know, you can swing your pips, you know, because I know that you want, you know. So watch this. You this in a general. You see how you interact with the areas of price sensitivity? It's like no funny business. You have interaction here. It was a price ceiling over here, broke this price ceiling, come back down, retest again, give a double bottom formation and 4 hour, and then it proceeds to give you, let's see, 1,000 pips. You see what I say? If you are wall at 0.2 from down here, so with this 1,000 pips then about $200 that, you know, after just a 0.2 lot, you know.
Easy.
Easy. See you trade there, you have your 100 pip stop loss and your 100 pip and your 1,000 pip target. You see what I'm saying? And all right, and then the next thing about these type of accounts, you know, right? You know, like on all right, let's say IC markets or whatever, the leverage is 1 to 500, right? So if you have a $200 account and you open like a 1 lot or so, it going to take away like $100 out of your margin. See? And volatility index, the leverage is 1 to 1,000. So you open a 0.20 lot, on a $200 account, it's probably going to be like $3 worth of your margin. So you can open a big position on this with just a small account. And the reason why I'm saying you can open a big position on this, if your technicals is on point, right? You can make a solid 1,000. You don't have to swing this away, you know. If you certain say, oh, your 100 pips stop loss are go respected, right? And you do your risk management accordingly. You can make a good piece of food just off of like 30 pips. You don't even have to swing to this. But the point I'm trying to show you is you don't have to do that because the way how these pairs move, you just have to just plan your trade them and trade the plan. Look on this. This is just one range, you know. This is 1,000 people range, you know. So Andre, you know, if you know you have your little 0.02 or 0.5 down here, so and you swing it for this. Is that good all $300-500 that right there, so after just some small positions.
Mm-hmm.
The reason why I did like VIX 75 is because you can use like a 0.01 and you can make $100, right? But you can lose $100 too.
Right.
To how that is volatile, they have to divide the 0.01 lot size into 2. So go down to 0.005. When you ever see that? 0.005. That them did have to do. This may I say? So this is you can swing this too, Andre. You can swing it. What's this a level down yourself again? Clean price action. It's even no funny business. And that is the most beautiful thing about this. Right? Next thing now.
Break out of the range and nice too.
Of course, and it retests right in so. And next thing I realized to see, because I tell you that it moves in impulse and wave, impulse and wave, impulse and retracement, right? Now, gone are the days when I used to use the fib tool, right? But since we come back to volatility index 100, I've been using the fib tool a lot because remember that, you know, as continuation traders, we're trying to get in at the end of the impulse move, at the end of the retracement move and at the start of the impulse move. So I realized that using the fibs is a good way to find entries as well. So let's say you never get your good entry down yourself at the price floor. You can use your fib, you know, and you can get an entry, right? This is the 705, this is the 61.8, and this is the 78.6, right? I don't know why it not show where so. So these are the regular fibs that we use on our forex chart right now. But look how price line up with the 705 fib. Like it's not even funny.
That man say right at the institution I can get it, so.
Right. You see it? So what you know, if you did miss the original entry down, you just come to again. Bamson. And you can still do your 1,000 pips. You see me I say? Easy like money. Yo, we can't tell you. Like look, you see, look on the impulse. Just one straight drive, one retracement, gone again. You see me I say? And them are clean moves I mean like to see. Because like this now, we can comfortably set a limit and go on my bed. And then the thing is, I don't have to set like a big limit. I don't have to set a big order. I can just use a small order, accept the $20 risk. You see me, I turn out, get $250 off of that one trade. You see what I'm saying?
But.
Now, this are just, so, I mean, for you, Andre, if you're swinging, I recommend you use regular 100, right? Because it's good for swinging. It trades in ranges. It really does. So this was the range it was in. It broke out of the range and go person and create this a new range. So it come down here. So now I was expecting to come all the way back down here, but it reverse here. So I don't know if it's go push go higher now. So these are the next one. This it's at the high frequency volatility index 100. I kind of like this one that you know. This one I know. This is for the GJ traders. Them, you see me? This pair is for the GJ traders, man. Now this one it respect levels just like the regular 100, but it move like GJ, you see what I say? And for this one it's slightly different. So
No, cut it, but when I realize already by looking at the charts, you know, really use much trend line. And most levels,
Sometimes I use trend line, you know.
me still.
Sometimes I use trend lines, but it mostly change. It's like a range bound pair. Like it just trade between ranges, like major ranges, major levels. But like on the lower time frame, you will get some trend line action for the lower time frame, man. Because may have the trend line, how to trade trend lines in the plan as well. So like over areas like yes, so right? You can have a trend line over here, someone. See it. And we have nice bounces after the trend line as well. And then